How are you?
I'm good. Good morning.
Good morning to you, Katie. So last time we talked, S&Ps were trading 43 something, and you were talking about I see 4,500, which was a good call. So we stretched it to 46, and I see you occasionally on other financial media, and you've been calling what's been happening since 4,600 a correction. You still stand by that?
Yeah, we do. Corrections often unfold in this ABC wave format. I'm not an
Yeah,
Elliott wave follower, but
yeah.
it makes sense. And it's really how it's unfolded this time around. We don't have a selling climax or anything of that nature to suggest that the correction is fully over, but we do have upturns in our overbought, oversold metrics. So, the weekly
Okay.
stochastics and the daily MACDs, we have enough of a shift in short-term momentum to suggest that it is over, even though we didn't get that big volatility spike or a selling climax. So we are sort of deferring to the cyclical bull trend as being intact, which is,
Okay.
as a technical analyst, I mean, that's what we should be doing, right? Just respecting the primary trends. But while we're bullish short term, and we have been for, I'd say, a week and a half or so.
Since 4,200 was a very obvious place for the battleground or for a correction to end. And
Yeah.
to me, it seems too obvious. I still think we have a shot for that selling climax, which you're talking about we didn't have.
Yeah, you're not alone in that. I'm sensing there's a lot of calls out there for even an 87 type of move. Here's hoping
Oh,
that's not
wow.
the case. I know,
Yeah.
I think it's just that this time of year, right? Once we get into October, fears are
Right.
often running high. It was the case last year, and it's the case again. But we're seeing those sentiment metrics, which did get oversold enough, right? We did get enough of a contrarian reading and things like the fear and greed index to suggest that we have some kind of low unfolding here. I think the real catch is that we don't know if this is just a short-term low or something that has more staying power. And in our research, we're suggesting that our long-term bias is still neutral
Okay.
unless we can see the S&P 500 get through that 4,600 level, which has proven to be a really strong level. And I
Yeah.
don't mind that the 4,200 is so widely followed, nor do I mind that the 4,600 is widely followed as resistance. I think there's a reason for that. And, it makes sense from where it's peaked in the past. And for 4,200, there's really a confluence of support there.
Yeah,
So I
that's
think
where
it's
we
a key
became
level.
parabolic to the upside when we took it out. That's
Mm-hmm.
how we got to 46. So it was
That's
kind of
right.
natural, kind of a
Yes.
natural. I
Yeah.
did hear that you said for us to get the market going again, it would be nice if yields peaked. So that's
It
also
would
part
be,
of,
wouldn't
yeah.
it?
Well, I want to see them go up. So I'd like to
Yeah.
see a cleanse, but it doesn't look like they've peaked yet. We had a little bit of a pullback here on the 10-year yield, and TLT
Mm-hmm.
is trying to base, but it looks like we could still flush one more time.
Yeah.
So
Could I
go
share
ahead.
my screen, Dale? I
Oh,
have.
that'd be great. I'm so tired of looking at my
Oh,
charts.
they're good
Go ahead.
charts.
All right,
But I
go
want to
ahead.
show you something specific, and it's based on the DeMark indicators on the 10-year Treasury yield. So if we look at
Okay.
10-year yields, and hopefully this will pull up, I'll make the chart bigger that we're going to like hone in on here. But on 10-year Treasury yields, we of course have this very steep up move. This is on a weekly bar chart.
Yeah.
And we saw a breakout, of course, above that 434 level. Now, if
Right.
you look at the red arrows, so here we
Yeah.
have one here, 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 etc. They've really been very timely indications of the corrections, that have
Yeah.
ensued within the context of what we believe to be a secular uptrend behind yields. And you can see that just in the cloud model, the shaded area. The
Okay.
market indicators, though, that are the source of those red arrows, they've been conducive to upside follow through up until this point. So I do think that we have enough of a counter trend indication that we should see consolidation at a very minimum, something like
Okay.
this, perhaps, right, where we have
Yeah, sideways.
consolidation, sideways action for maybe 6-8 weeks from here, based on the nature of these signals. And
So
yet,
you got that signal 2 weeks ago, Katie, where you have the
Mhm.
5 up there? Okay,
That's right. So it's actually the 9 that generates the red arrow, and it was preceded by a 13, which is very similar to the last two sort of pre-corrective signals.
okay,
And those signals are indicative of a counter trend move in the nature of up to, I'd say, 9 weeks from where the 13 is generated. So we're already into it theoretically based on the
okay.
DeMark indicators. So we would expect
Interesting.
more of the same. And I think that that is key towards the relief rally in the equity market sustaining itself over that same time frame as well, which, as we know, is a very strong seasonal period for the equity market. If we go into any of our sort of seasonal work, I love the seasonal graph that I can try to pull up here.
Yeah,
We
September
do.
was a bad month, and through the end of the year, it's bullish.
That's right. So here's, and it doesn't matter how we slice it. This is a 5-year view of the S&P 500 on a monthly basis, just returns. And you can see October, November, really very strong after a very weak September. I mean, we can go back 10 years and see the same. We can go back 20 years and see the same. So it's a fairly.
Can you go back 50?
Let's
Because
try.
that was the last time we had a big war in the Middle East.
It looks like we can only go back 30. So
All
we'll
right, I
see what we can
knew
do.
it, but this is something, and I feel this way. I've been talking about it, that this is a big deal, and it can overwhelm your charts. It can overwhelm seasonals. It's one of the biggest geo events, probably bigger than Ukraine. That
For
we've had.
sure. Yeah, we have to respect the geopolitical drivers. And this is what I always tell people, is that when we're looking at charts, we're sort of listening to the market. The market is trying to tell us something. And, all the information is getting boiled into the price trends. But we can't, predict why something will happen, right? We can only
Right.
really, as technical analysts, react to it. We can try to manage risk with what we know. As an example, this is the weekly S&P 500 chart. We have this oversold condition here with an upturn. Historically, that's been a good entry point with a duration of at least several weeks, right? So that just puts probabilities in our favor. Now, Dale, there's so many risks out there. And if those risks do generate a breakdown, and for us, that would occur really below here. So sort of 2 weekly closes below here would be a pretty big setback, in our opinion, for the market. We would certainly manage risk through that and react to that. So what's nice about it is that we have an oversold reading near a strong support area between the 200-day and this former resistance. And then, we know where our risk increases. It's below that area, because the next support, in part based on the cloud, you can see that's around 39.08. So there is
that's my target for a swoosh, if we get one, about 39.5, not quite the March lows. So that's interesting that you bring that up. So
and look at the Fibonacci retracements here. So if we take the whole cyclical bull move, the 38.2% is at 41.81. So that's actually our bottom boundary of the support level that we've been highlighting. And when the 38.2% is taken out, then it sort of targets the 61.8% retracement. So that's also fairly well aligned with the cloud. So you can see the importance of this level, and then secondarily this level. But the indicators do support a return to the highs, even potentially around 4,600. In the very sort of near term, there's a hurdle based on the daily cloud. If you see that here, that's at 4471 on the daily chart. So that's going to be the first hurdle by our metrics. But we think that the momentum shift and also the breadth shift is strong enough to get us up to this resistance.
Okay, is the dollar also part of the play, like the yields, where the dollar has come off recent highs? We put in a lower high in the Dixie on Friday, and up until the news, retail sales news, it was starting to decline again. So does this look like, I'm not an Elliotician either, but in ABC, that the first decline that we had was A, and what are we looking at, a weekly in
Yeah,
this case?
perhaps. And this is the weekly bar. So I
Okay.
think the takeaway is maybe a little bit more muted than what we have from the DeMark indicators on treasury yields, but you can see there here too, we have a red arrow. And that's based
Okay.
off of this signal here, this 9. And you can see that it occurs within the context of the cloud. The cloud is really very reliable for FX. That's at least in our experience. So as an example, like when you see this downdraft here, the bottom boundary should provide support. And then when the upper boundary provides resistance, that's a setback, right? And here's your breakdown.
Where's the upper end of the cloud right now, Katie?
This is about, let's see, 107.78 for the dollar.
Okay.
So
Right,
this is a longer term view. You can see the overbought reading here, of course, too. So not quite as decisive as what we're seeing in yields from our indicators, but you could certainly see some consolidation within this context. But back in here, I mean, this was a pretty meaningful breakout, right? It cleared so many resistance levels within this context here, you know, the 200-day, the 50-day, the daily cloud, this previous resistance. So I think we have to trust that this is a real turnaround from a longer term perspective, and that what we're looking for is more just near term consolidation.
Okay. You know, we had that explosion in gold. Some of the shares have acted good. Are you on the miners now? Do you believe this wake up call that gold gave us with that $110 rally?
I'm not a believer, and only because it was preceded by a breakdown, and there's still resistance. If we look at the generic contract, we have this cloud, which has been very reliable here too, of short-term peaks. And notice here we have, so the shaded area is the resistance, very close by, runs up to about 1937. And if we break through it, well, then I'll be a believer. But you see what has happened in the last 3 up moves. It has failed right near that cloud. And also with the red arrows popping up at these 9s, you see that we're on an 8. So we're pretty close to an overbought indication there. So once we get through that, or if we get through that, then I'd feel better, like this downdraft is maturing. Yeah. But for now, I think we have to trust that it's still counter trend.
What was that 4 above it? Is that a DeMark number above
That's
the
a
cloud?
DeMark number. Yeah, it's a little bit of sort of a funky way that it's developed in here. We look for 13s in that sequence, the purple one, and it's obviously pretty far gone.
So we're far away from 13s.
Yeah.
Oh, okay. So what else is top of mind for you, Katie, as we work through this week and you know, what's happening geo-wise? Every time I see a move in the cannabis stocks, I think about you, because you guys stopped covering them. Are you starting to cover them again?
Well, it's interesting. No, we haven't come back to them. But listen, like we're paying attention, right? They have perked up, and we're kind of interested in almost like the macro takeaway there, because it shows a risk appetite, but it also could just really be specific to regulation there. So, but we're intrigued, and we're also, I want to show you a couple of things. The Russell 2000. Look at this trading range. I mean,
ugly.
It's ugly, but look, here's another one of these arrows. This is a green arrow at an oversold reading. So it tells us that we should see support discovery by the Russell, which is a small cap benchmark. And therein, we should also see breadth improve. And breadth is not great, or has not been great, as you know. In fact, it's really been an issue all year. We're kind of back to square one in terms of market breadth. The cumulative advanced decline line really needs to bounce here. That's what this is. You see it's got it's testing the cloud, if you will. So we really want to see breadth expansion. Or if we don't, then that to me will take away from the sustainability of this relief rally. And the last thing that we have on our radar is Bitcoin, which is something that we do still cover on a weekly basis. Arguably, it's been a bit boring lately, but it could get pretty interesting here, because we have, with the recent news around the ETF sort of possibility, we have a pending breakout in Bitcoin above our cloud. And just like for FX, the cloud has been really very reliable. Here it acted as resistance. Here we almost had the same type of action that you saw before in the dollar index where it came down, it held that resistance, and here was your breakdown. So now with this, if we see a couple weeks above, so just this week and next, that would mark a pretty significant breakout in our work for Bitcoin. And it doesn't really resolve some issues on the monthly chart, but I think from an intermediate term perspective, that's pretty promising. And you can see the upturn here in the weekly stochastics as supportive of that potential breakout. And also just the shape of it has that kind of Bayesian phase look to it.
Okay, interesting. Last time you were on, oil shares were an important or mainstay of your ETF. You liked the oils last time we were together. Where do you stand on them now?
Yeah, on crude oil, we did see a breakout, and that was like between June and July, or I guess more accurately, July. We saw a good turnaround there and some follow through that took crude oil above its 200-day moving average. That was in here. Now you see the cloud, it's trending higher on the daily, but arguably not very steep or impressive in the trend. Here's the weekly chart of crude oil. So here too, you almost have sort of a rounded base in place with a breakout of this previous resistance, which was roughly 83. And that to us is roughly initial support now. But this is the hurdle, this $94 per barrel area. Above that, then it starts to look more sustainable. And we've been calling for a potential breakout, but it's looking increasingly less likely with what we're seeing here. You almost see a double top type of setup in the weekly stochastics. So we're not totally convinced that this energy sector relative strength is going to be sustainable. So we're constructive on it in our research. We're overweight. We do not have energy exposure right now in the ETF. We have just the leading sectors for, technology, communication services, industrials, and consumer discretionary. Of course, not accidentally very heavy on the mega cap exposure in those sectors, right? So the energy move, we would be taking advantage of it for now, but we would be somewhat non-committal to it.
Okay, where's the bottom of the cloud on WTI?
So here it's around 76. So that would be effectively secondary support. So if you broke the daily cloud, which is a moving target, so it's a little tricky, but let's call this like 82 to 83 if we look at a week or so. You take out the bottom boundary of that. That's going to be a short-term setback that would target the bottom boundary of the weekly cloud. And you can see that sort of 82, 83 area is bolstered by this, which is former resistance.
Yeah. So maybe that's where we have to go to shake out all the people who are long oil because of a potential war and what could happen if it escalates with Iran and the Straits of Hormuz, yada, yada, yada. And maybe they have to be taken out first before we get that move.
It's possible. Yeah, that 76 level is key towards the preservation of this turnaround.
Okay. And I think we've covered the board. Are you doing anything with uranium? That was like Cameco was a huge winner up until a month or so ago. The uranium sector was, I guess, a lot of retail flow. I'm not sure if it was institutional, but they were really strong charts.
Yeah. And listen, we've had a good run in uranium. It was something that I featured a few weeks ago. In the media, and they said, well, what are you buying right now? It was like right as the corrective phase and the S&P 500 had gotten started. So I said, well, how about uranium? And if that doesn't tell you how I feel about the equity market, I don't know what does.
Did you have a Geiger counter to find the individual issues in uranium?
Well, this is why we went with the ETF. So URNM as a way to proxy for it. And you can see this nice run gave way to a counter trend indication. And that counter trend indication occurred pretty close to long-term resistance. So if I was a long-term sort of interested investor in uranium, I wouldn't worry about the setup. But if I was more of a short-term oriented trader or had just been there for an opportunistic move, I'd probably be reducing.
Okay. You bring up mega cap. Could I ask you to take a look at a couple of them before we say goodbye, like NVIDIA, to me,
Mhm.
looks like it's carving out a right shoulder of a
Mhm.
Head and Shoulders top. What are you seeing there? That's really the poster child for AI.
Yeah, and it's not what it was, right? We know that it's
Right.
gone from a strong uptrend to now effectively a trading range type of setup. The short-term gauges point higher. You can see it here
Okay.
in part on the weekly stochastic. So we can't be sure that this is a right shoulder, right, until we have some kind of peak. It could
Yeah.
certainly unfold that way. What I will say is that, and this goes for a lot of the mega caps and even the major indices, and that's all the more reason to be somewhat non-committal to the relief rally, is that we have counter trend indications on the monthlies to suggest
Okay.
that kind of at best that NVIDIA is probably more range bound for even more than 3 or 4 months potentially. So we have these
Okay.
counter trend indications there. So I think that we can be there short term. It does still have very good relative strength versus the S&P 500, but it's certainly not the position that it was before.
Amazon gave up 15% in 7 trading days, and it's bouncing back. What's the look on Amazon?
Well,
And
it's funny, it really barely participated in the correction,
yeah,
as the others, right? And you see
yeah,
that in relative performance here. So this is the ratio. It's a little messy, but versus the S&P 500, just look at that 200-day moving average in yellow. I think that in and of itself is a compelling reason to be long biased with Amazon, just the turnaround in relative performance this year.
okay.
It shows a growing interest there. And I think you do have some kind of short-term entry. So here's the turnaround versus the cloud, and here's our oversold upturn that's shared by so many stocks. So I think a short-term entry, I think that relative performance is really very promising, not just short-term, but long-term. But it's hardly free and clear of resistance, right? I mean, look at the peaks, right? This is the first hurdles right in here.
So when Microsoft and Apple were making all-time highs, Amazon only retraced 61.8 of
Right.
its prior decline.
So it's really more of a turnaround play versus those. And you don't want your whole portfolio to be turnaround plays, right? You want to have mostly securities that are in long-term uptrends. And Amazon's not really that right now, but it has some potential, I think.
Katie Stockton, your work is elite, and the way you communicate it is even better.
Thank you so much, Dale. I appreciate that.
Yeah, really, you could have great work, but the way you're able to describe it to people really is a talent. So
Thank you so much.
we really appreciate you coming here and edifying the FACE community every time you're here, Katie.
Of course, happy to.
All right. Well, you have a great trading season
You
this
too.
fall, and we'll get back together when the snow is falling.
Sounds like a plan. Take care, everyone.
All right, Katie Stockton, follow Katie at Stockton Katie and check out her ETF, the name of the website before we go, Katie.
We have fairleadfunds.com or fairleadstrategies.com. If you want to research trial, we offer 30-day research trial. So
okay. And the Fairlead is an understatement. It should be outstanding lead. So thanks, Katie.
Take care.
All right. So that's a wrap, Warriors. Katie's great, isn't she? I mean, every time I talk to her, you can tell I'm asking her about my book when I'm when I'm interviewing her. Anyway, I hope it adds value to what you're trying to accomplish, bringing top tier technical traders to you. And you could join the team in looks like 19 minutes for the morning edge. Thank you, everyone. Good luck, good hunting, and don't just count your pips, count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.